So in our previous session, we explained the BRS considering the transactions from the starting point as a cash book balance. In this session, we will be discussing those similar transactions from the passbook balance as a starting point. Transaction number 1, bank charges recorded twice in the cash book. When you record bank charges twice in your cash book, you have reduced your cash book balance more than the necessary, isn't it? Since we are starting from passbook balance to reach the cash book balance, we subtract this duplicate entry because the cash book is showing an artificially lower balance, isn't it? We have to deduct. Next transaction, undercasting of credit side of passbook. When the bank incorrectly totaled deposits as less than the actual, the passbook balance appears lower than it should be, isn't it? So we have to add this undercasting difference to correct the passbook balance. Moving on to the next transaction, bank charges debited in passbook only. The bank has deducted charges from your account, reducing the passbook balance. So, but your cash book doesn't show this reduction, so we have to add the bank charges to bring the passbook balance to match the higher cash book balance. Moving on to the next transaction, bill discounted previously dishonored in the passbook only. When a discounted bill is dishonored, the bank recovers the amount which reduces your passbook balance first. So your cash book doesn't reflect this recovery. We have to add back the passbook balance to match the cash book balance. Moving on to the next transaction, overcasting of receipt side of the cash book. If as an accountant you have totaled your receipts as more than the actual amount, your cash book balance appears higher than it should be, isn't it? So we are adding this overcasting error to adjust the passbook balance upward to match the inflated cash book balance. We have to add. Moving on to the transaction, check deposited but not cleared. You have recorded this deposit in your cash book immediately upon deposit, but the bank hasn't processed it yet, isn't it? So the passbook balance is lower. So we are adding the deposit to match your cash book balance. Moving on to the next transaction, excess amount debited in the cash book. If you have recorded a receipts more than the actual amount, your cash book balance is more than it should be. Since we are starting from the passbook balance, we have to add. Moving on to the next transaction, direct payment by the customer in the passbook only. Since the customer has made payment directly to the bank, which is increasing your passbook balance, but your cash book doesn't show these receipts, we subtract these amounts because the cash book balance is lower. Moving on to the next transaction, checks drawn but not issued. Since you have recorded a check in your cash book but you haven't actually given it to the recipient, isn't it? Your cash book shows a lower balance, so we subtract this amount from the passbook balance. Moving on to the next transaction, wrong debit in the passbook. Since the bank has incorrectly debited your account, your passbook balance appears lower than the actual. We have to add back this wrong debit to the passbook balance in order to correct it to reconcile the difference. So moving on to the next transaction, undercasting of payment side of the cash book. Since the accountant or you have totaled the payments as less than the actual, your cash book balance appears higher than it should be, isn't it? So we have to add this undercasting difference to adjust the upward. Moving on to the transaction, checks issued but not presented. Since you have issued and recorded a check in your cash book which reduces your cash book balance, but the recipient hasn't cashed it yet, the passbook remains higher, so we have to subtract this unpresented check. In the next transaction, interest dividend collected by bank not recorded in the cash book. When banks collect interest or dividends on your behalf, the passbook balance increases, but your cash book doesn't reflect this. We subtract these collections because the cash book is showing lower balance. Next transaction, where interest is debited in the passbook only, the interest charges reduces your passbook balance first, but your cash book doesn't show this expense. We have to add this interest to match the higher cash book balance. So next transaction, payments by bank debited in passbook only. When banks make payments on your behalf, they reduce your passbook balance, but your cash book doesn't record these payments. We add these amounts to match the cash book. Next transaction, where deposits recorded twice in the cash book. Recording the same deposit twice inflates your cash book balance, isn't it? So we have to add this duplicate amount to make the passbook balance match the higher cash book balance. Moving on to the next transaction, where undercasting of receipt side of the cash book. If you have totaled the receipts as less than the actual, it is called under totaling, isn't it? Your cash book balance is lower than it should be. We subtract this difference from the passbook balance. Moving on to the next transactions, checks deposited dishonored in passbook only. So when a deposited check bounces, the bank reverses the credit, so reducing the passbook balance. So your cash book is still showing the original deposit, so we have adding back the dishonored amount. The next transaction, where amount withdrawn from bank now not recorded in the cash book. If you have withdrawn money but forgot to record in your cash book, the passbook shows the withdrawal while the cash book doesn't, isn't it? So we have to add this withdrawal match to higher cash book balance, since the passbook is the starting point. In the next transaction, overcasting of the debit side of the passbook means if the bank has totaled the withdrawal column as more than the actual, your passbook balance appears lower. We have to add this overcasting error to correct the balance. Moving on to the next transaction, overcasting of payment side of the cash book. If you have totaled the payments as more than the actual, your cash book balance appears lower. We have to subtract this overcasting error from the passbook balance. And the last transaction, wrong credit in the passbook, means if the bank has incorrectly credited your account, your passbook balance appears higher than it should be, isn't it? So we have to subtract this wrong credit in order to reconcile and correct the balance. Students, remember, when starting from the passbook balance, we are working towards the cash book balance. The key is understanding that we add amounts when the cash book balance is higher than the passbook balance and subtract it when it is lower. Each adjustment has a logical explanation based on the timing difference, recording difference or errors, transactions recorded in only one book. So master this reverse approach along with the cash book method, and you will have a complete command over the bank reconciliation statement preparation. This comprehensive understanding is essential for professional accounting success. Hope you have understood the BRS practical examples. If you like the video, please like and share the video, and do not forget to subscribe our channel Lator Academy. Thank you.